Hi, welcome back to Agent Insider. I'm your host, Andy Jewell. Thanks for joining us today. I have a guest with me, returning guest, Gerald. Gerald, thanks for taking time to chat with me this morning about insurance stuff. So I've kind of deviated. We talked about a lot of different things in the last few shows. We haven't talked about insurance as much. And something that's really been on my mind about insurance is... I tell people this all the time. Insurance, the devil is in the details. Mm-hmm. And I think that's something that's really important to try to help people understand when it comes to insurance. Because most times people think, like, if I'm buying a homeowner's insurance policy, it's the same for same. Yeah, no, for sure. I think we've been dealing, I've been in the insurance industry now 14 years or so. And I recently had my first claim for my through insurance. Yeah. Welcome. And I realized I need to go read my policy. You're like, what? There's details in this policy? Yeah. What is it's just covered, right? Right. Why do I pay all this money? Yes. I remember I was early on in the claim. I was like, man, I better read how this all, like, my policy works. Because it's easy to, home insurance. Okay, home insurance covers your house. Like, okay, but how and when and to what extent and to what coverages and so. Yeah, I had a customer that I was doing a review with them on something on I think it was their auto insurance, and they had canceled their home insurance with us and had gone to a different company. And I was like, well, that's part of why your rates went up on your auto insurance is you lost that discount. We should look at that again. And he happened to have brought his homeowner's insurance declaration page with him. And he was like, well, this new policy was like $350 a year less. And I was like, okay, well, let's look at it. And I was like, well, it's less because your coverage is different. Like, you have way different coverage than what you had with us. He's like, well, I told him what I had. Right. Yeah. And in his defense, the dwelling coverage, it's called coverage A or dwelling on his policy, showed the same. So the policy that he had with us showed, it was like $420,000. The policy he had with the new company showed $420,000. But then the differences started in, he had extended replacement cost, which means if it goes over that $420,000, he would have an additional, and his extended replacement cost was 25%. So he had an additional 25% on top of that $420,000 if he needed it. The policy he had with us was guaranteed replacement cost, which means that there was no limit. Mm-hmm. We would just rebuild the house no matter what the cost was. There was no cap. Right. And so I was like, well, that in and of itself is a huge difference. Yeah. If you have a claim, you could be out. You could not have enough money to rebuild your house theoretically on that policy. And that's just going to be the way it is. Right. Policy you had with us, we would rebuild your house no matter what the cost was. It could have been $1 million to rebuild because of inflation and who knows what else came up, and we'd still pay that. Right. Yeah. I think that is the hard part. You brought up the term or homeowner's policy or declaration page, and those numbers. I mean, one, I think if you're not in insurance, that page alone looks overwhelming already. Right. There's coverage A, dwelling, this number, deductible, and then it just like line items. A, B, C, D, E, F. You have all of those lines are coverage items. Right. And then it starts abbreviating things like if it's how it's going to be paid out, and it can feel overwhelming. And I think as just consumers of insurance, as long as the numbers match, I'm happy. Right. That's what we look at. We look at that on you're looking at a homeowner's insurance. You look at coverage A, your dwelling amount. Like, well, that's how much my house is going to be covered for. And I look at my premium. Those are the two things most people pay attention to when they're looking at homeowner's insurance. Yeah. So the conversation is with customers, and this is what you were doing is, hey, it's good to look at the coverages and the numbers are there. But then, like you mentioned, it's important to know the details of like, well, how do these coverages actually work at the end of the day? Right. And not that you have to go through the whole
policy with a fine-tooth comb, but to a degree you have to understand.
Right. Well, the thing is like people forget is like the insurance companies are putting that extra 100 pages of your policy, that thick policy that you get in there for a reason. Mm-hmm. And people are like, oh, it's like all that matters is those first 2 pages. Like, well, actually, really what matters is that 100 pages behind it. So there's like 6 main types of homeowners insurance that all could show $420,000 for dwelling coverage. Oh. And they're all going to respond differently in the event of a claim. So like you could have, they have HO1, HO2, HO3. They have DP1, DP2, DP3. And then you can have basic, broad, or special form of any of those. You could, so you could mix and match a lot of different combinations, and it's going to change whether it's replacement cost, actual cash value, extended replacement cost, whether it's named perils, whether it's expanded named perils, or if it's an open perils.
Just listening to you, and I'm in insurance, I'm like, that sounds overwhelming.
Right. It is. It totally is.
Just show me the numbers.
Right. Just like, how much am I paying? It's like, well, it depends. Right. And this is the part, right? Like, so I think about this. So I'm going to use the example of a basic form versus a special form. Mm-hmm. So basic form, you're going to typically is always going to be ACV, actual cash value. So they're going to depreciate the replacement costs. Mm-hmm. So based on how old it is. Mm-hmm. And it's going to be named perils. So you get like 10 named perils. You get like fire, theft, lightning, things like that. They don't cover water damage at all. So if you burst pipe, it's not going to be covered.
Yeah.
Whereas a special form is an open perils policy, which means if it's not specifically excluded in the policy, it would be covered.
Right.
So they will cover a burst pipe typically, unless they added a specific exclusion for that burst pipe. And it's going to be covered at replacement cost. So that $420,000 that you have on your declaration page on that basic ACV policy, you have let's just use fire. So it's a covered peril. You have a fire, the house burns down, and the contractor says it's going to cost us $410,000 to rebuild the house. So you're thinking,
yeah, I'm good.
Right. Because I got $420,000. Joke's on you, Andy. I have enough coverage.
Yeah.
And then the adjuster says, okay, the bid is $420,000, but your house is 10 years old. Mm-hmm. And the life expectancy of a home component. Now this is, you have effective age and you have actual age. The actual age is 10 years old. And we're just for simplicity purposes, we're going to say that's the effective age as well, which means the life expectancy of a house, I think, is like 40 years. So you're 25% through roughly, using some round numbers, through the life expectancy. So they're going to take that $400,000 bid, or that, I said 420.
410.
I said 410, right? Because your coverage was 420.
Right.
So you're going to take 410,000, and I should have used numbers that were easier for me to math. And we're going to say they're going to pay out 75% of it because your depreciation is 25%. So then they're going to say, well, we'll give you a check for $307,000.
Right. But my coverage says 420 on it.
Your limit is 420. Your coverage isn't 420. And that's probably where there's some misunderstanding about how the insurance works, right?
Right.
They look at the limits and think that's what my coverage is.
Right.
That's the maximum amount the insurance company is going to pay. Mm-hmm. Whereas the coverage is defined inside of the policy.
Right.
So
how are we going to pay the 420?
What am I going to pay out to you, or in what instance will I pay out to you, and how much will I pay out to you?
Right.
So your ACV basic policy, your fire, it's a covered peril, so you're good. Mm-hmm. Your bid was $410,000. So you're like, I'm golden because I got 420 on my deck page.
Right.
But it's ACV, so they depreciated it and wrote you a check for $307.
Yeah.
On the flip side, that special form, which now has RCV, replacement cost valuation, on the policy, It's open perils. Fire is covered. It burns down. The bid comes at 410. You say, I got 420 on my coverage, and the adjuster will write you a check for 410,000 because it's replacement cost. Mm-hmm. So now that $300 that you saved on your annual premium cost you $100,000, $103,000.
Yeah, too much,
right? Like, and that's what I always try to convey to people is to think about is when it comes to insurance, you should insure things you can't afford. Mm-hmm. If you can afford $100,000, you're like, hey, I'm cool. If that cost me $100,000 and I'd rather save that $300 and I figure my return on that investment is good, well, then fine, buy the ACV policy and know that you're going to be out of pocket in the event of a claim. And that's within your comfort zone.
Right.
For me, like $300 is inside of my comfort zone.
Right.
I can pay that $300. $100,000 is outside my comfort zone. I'm like, I'm not comfortable paying $100,000 if my house burns down. Right. Same thing with liability. I tell people like, you should have liability enough to protect your assets because I'm okay paying $200 or $300 a year for an umbrella policy for an extra $1 million. So if I get sued, I don't lose everything.
Right.
Because I can afford $200-$300. I can't afford to get sued for $1 million.
Right.
That's going to hurt me. That's going to negatively impact my family and our future for a long time if I lose $1 million lawsuit.
Right. Yeah. And that's, and like you mentioned with regards to like coverages versus limits is it can become overwhelming, but the hope is you have an agent that's kind of walking you through this going, here's the limit, the total, here's how this coverage works according to this particular policy. And so here's, are you willing to take that risk? Are you okay with possibly being out $100,000 and some $1,000
right
in case of a fire? But you don't, if you don't understand it and you're just looking at the numbers, all insurance looks the same at that point.
Right.
It's $420,000 that I'm covered for.
We see this on commercial insurance too, right? General liability for a contractor.
Yeah.
$1 million per claim, $2 million per year, pretty standard insurance.
Right. Yep.
So I'm like, hey, if I'm a contractor and I buy that, I'm just fine.
Right. So you think,
right? There's not a problem if I go like, hey, I build homes, right? So I'm insured as a single family home contractor even, and now I'm building a tract home development.
Right.
Well, I'm still just building homes, so I'm fine, right?
Right. Right. Until something happens.
Right. Until you read the policy, and then the policy goes, well, actually, there's an exclusion for multifamily and tract home development in here. If you build more than 10 homes in any development at any point in time, we're not covering it.
Right.
Like, but I got $1 million.
Yeah. And that is the part where we often, where we normally see the tension with claims. Sometimes it's the claims process is just hard. You've out a home or whatever, and it gets frustrating. I think sometimes it's when the shock goes, well, that's actually not covered.
Right.
because you are on a named peril, which means it has to be listed as a covered loss in order for it to be covered, and it's not listed. Water damage isn't listed. And so sorry to tell you.
Right. Well, and I've seen that, right?
Yeah.
I've seen that exact scenario that you just described, where the homeowner's coverage amount, dwelling, same amount, separate structures, same amount, loss of use, same amount, which pays for you to stay someplace else where your house is rebuilt, liability, same amount, medical payments, same amount, deductible, same amount. You think you're getting the same policy.
Yeah.
Right. And then they have frozen pipes.
Yeah.
And this policy was even a special form policy, right? So the customer would assume it would be fine because it's an open perils policy. Right. So this is the part that even gets a little more tricky because it's an open perils policy, which means it's covered unless it's excluded. So the customer is like, oh, well, we're fine.
Right.
Except there's an exclusion for all water, including frozen, unless you add this extra endorsement
you buy
back
it back essentially. Yeah.
And then the customer's not covered.
Right.
And you go, and the customer's sitting there very frustrated. Well, I didn't know. Well, it's because the devil's in the details.
Right. So what would you tell a customer? So like I mentioned earlier, you're listing all these different policy types and then all these other different coverage types. As a consumer or just someone that's looking to purchase a home, get insurance, how would I go about, one, even understanding this? Like what should my practice be if I'm talking to agents? What should I ask them to do to help me understand? Or what's your practice if you're walking through something like this?
So I think from a consumer standpoint, right? I think it's important to ask questions of the agent that you're working with. And this is why I do think agents matter. I mean, I got a dog in the fight. I'm an agent, right? Yeah. But I think having an insurance agent, having a person help you matters, because when you just buy something online, you don't know what you're buying ultimately, right? You're guessing, you're hoping. So having somebody that you can talk to matters. And then I think you got to ask them questions. Yeah. So it's kind of like if you're going to work with a lawyer, or you're going to work with a realtor, or you're going to work with a mortgage broker, like you have to ask good questions to see, like, hey, is this person a professional? Do they know what they're talking about? Do they understand their industry? Because I'm going to rely on them to give me recommendations. I recently had to change tax accountants, and so met with the new accountant that I was going to use. And I just spent like an hour just talking with them. I was like, hey, here's my philosophy. I tell him, like, this is my philosophy of how I want to manage my taxes and how I want to pay taxes. And this is how I look at it. And do you agree with that? And first off, right? And so in that same aspect, if I was talking to an insurance agent, my first conversation is like, this is my expectation. This is how I want to manage my risk. This is the risk I'm comfortable with, and this is the risk I am not comfortable with. Do you understand that, and do you agree with that, right? And if they do, then the next part, which my accountant did, so then the next part I was like, okay, now you tell me how you help me, right? Like, you tell me what you're going to do, what your process is. And I'll ask him a few questions to see, like, does he seem to have a depth of knowledge in his industry? And so I would do the same thing with an insurance agent. I'd say, okay, tell me your process of how you're going to make this recommendation for me and why. And if he hasn't already, right? And then allow them to walk that through, and then ask them some follow-up questions to see, do they understand the difference between a DP1, a DP2, and a DP3, right? Like, can they explain to me the difference between named perils, open perils, extended replacement costs, ACV and RCV. Like, those are really basic things in the insurance world that an insurance agent should be able to explain to you. If they can't explain those things to you, I would say I would be concerned, because that means they probably haven't read through policies. And I tell new agents this all the time, like, you need to take time to read the policy that you're selling and read the policy that you're quoting against. Because if you haven't taken any time to read your policies, you don't really know what you're selling.
Right. Yeah. And you mentioned this earlier. It's as if you're just buying online.
Right.
Like, why get an agent? Why go through an agent office? Just go buy some online then. If your agent hasn't taken the time to understand some of these different basic coverage types and abbreviations of how coverages work.
Right. They make us all look bad, ultimately. Like, I hate it when I see agents do that. No, I mean, it's easy pickings to take customers from them. Yeah. But but it bothers me, because I'm like, you're soiling not my brand, because we're different companies, but you're soiling the brand of an insurance agent.
Yeah. And we do see this a lot, like where people will get other quotes and say, well, we got the same. I told them my coverages and they gave me this price. It's like, okay, but have you seen the policy?
Yeah.
Have you seen the coverages that they quoted you in? Because it's one thing when someone tells me a coverage, I have 400,000. It's like, great. But our calculator came in at 300,000. So that's what I'm going to quote you for. And so, of course, I came under, $200 cheaper. Yeah. So I'm going to tell you, great, here's a quote for $200 less. And people do call us and say, I got a quote that did this and this. And our practice typically is, well, I'll review the quotes and I'll give you a comparison. Because unfortunately, the truth is, like you mentioned, is there are agents out there that, although you can tell them your coverages, one, maybe they don't even quote the same, or they quote you the same, but it's a completely different coverage type that is going to give you a cheaper quote.
Yeah.
You know, you're not asking the right questions as the agent. So that would be the other side, is as an agent, how do you educate people? What would your...
So typically what I'll do when I'm meeting with somebody, as the agent, I'll ask them, what do you have for coverages right now? Because I think it is important to understand, what do you have for coverage? Because when we compare now, if I don't know what your coverages are, and because some people are like, well, just give me a quote. Well, I'm going to, but I want you to be able, when I sit down with you, I want to be able to show you, here's where the differences are. Otherwise, the only thing you're going to compare is the price. And price is important, but I want to first know what your coverages are. Then I need to understand what's important to you about your coverages, right? What deductibles are you comfortable with? What risk are you accepting, and what risk do you want to transfer to the insurance company? And then I will I always go through an asset analysis, which is basically just saying, what do you have at risk? Because most people don't even understand what they have at risk from a lawsuit standpoint. It's easy for me to figure out the value of your house. So then now I know what you have at risk for your home,
right,
from a fire or some type of claim that way. And then we need to know what you're at risk for from a lawsuit standpoint. And then I'm going to, based on what you told me about how comfortable you are with risk and how much risk you want to take, then I'm going to build a plan to try to match up the risk that you want to take on and get you the best value for that as I can.
Yeah.
And try to, and so then a lot of times what I'll do is, like, we'll say, okay, hey, we want to try to keep our premiums in this range. And I'm comfortable with $10,000 of risk, but nothing more.
Right.
Like, okay, well then we're going to use high deductibles. We're going to, anything under $10,000 where you would get a coverage, but it's only up to 10 grand. So like maybe personal injury protection or things like that, right? Those become optional now. And I say, okay, let's put those over here in our optional category. And those are like, they'd be great to add them in, but we understand that you're okay with that risk if we don't have them in there. Whereas we're more concerned with the $1 million claim. We're more concerned with the house burning down. We're not okay with the risk of $500,000 or $100,000 using ACV versus RCV, right? We're not okay with that risk, but we're okay with a high deductible because you told me you're okay with $10,000.
Right.
So now I want to build your insurance plan around what you're comfortable with. And it's not the same for everybody. Everybody has a different, because you're in a different place in life.
Right.
So everybody has different risks that they're comfortable with, and they have different tolerance for that risk.
Yeah. In the way you're putting it together, and I think the way that we try to, as an office, try to do this too, is there is trying to take consumers from, you have to pay insurance because that's the law, or the bank's requiring you, to, hey, the benefit of insurance is to protect your assets and to pay the things you're investing into, right? Is like, if I don't really care about my house and I just want to satisfy a bank, give me whatever.
Right. I'll take the ACV basic form.
Yeah. And as a consumer, then I am taking, as you're describing, I'm taking the risk, realizing that if I have a loss, I might be out of house, but hey, the bank will be happy, so I'm okay.
Right.
Versus if I'm a consumer who's kind of realizing there's a risk to this that I'm assuming, that I then want to make sure that I understand not just how the risk works, but what is my risk into it.
Right.
Am I out $100,000 or am I out just a deductible? Because the coverages are there to help me with extended replacement and, high deductibles or whatever. And so that is, as you're describing, like as an agent, you should have an agent who's walking you through, hey, this isn't just about satisfying a bank. And if that's what you want, if that's the discussion, like you were saying earlier with philosophies, your philosophy is, I just want to satisfy a bank.
Yep.
Great.
Right. And there's some people that are like that.
Yeah.
Like I've talked with people and they're very wealthy. And so they're worried about liability and they're worried about just making the bank happy. Because at the end of the day, he's like, hey, if this place burned down,
and I have to rebuild it, I actually have the assets that I could do that.
Right.
I'm like, okay, well then we'll strip it down. And if you're willing to risk $200,000 or $300,000 to save $200 or $300,
right? Yeah, typically the savings,
right? Like if that's okay with you,
yeah,
I'll build it that way,
right?
So I would say there's not necessarily, and that's why there's so many options,
right,
in the insurance industry, is because there's not necessarily one coverage that everybody needs. Mm-hmm. It is not a one size fits all snap back baseball cap, right? They are fitted. They should be fitted to your size.
Yeah. Yeah. And I will give, I guess I'd encourage too. And we had a customer who last minute, they had to make a change to come to our agency, because of her prior carrier and stuff. And so it was like last minute, can I just have a quote to satisfy the banks? So I remember, because I worked on it. And this year she actually had the courage, because we typically try to offer reviews, and she had the courage to say, can you just talk me through what I have? Yeah. And she's honest. She's like, I've bought this from my parents. I've been paying it for 12 years and I don't even actually know what I'm paying for. And that like takes courage, I think, as a consumer to go, hey, I actually want to know how this works. Yeah. And so I'd encourage you, if you really don't understand how this works, or you're not comfortable figuring out, wait, do I have replacement costs? Do I have, do I have broad, form, or special? Like what coverages do I have? I would encourage you go ask, because it's your risk that you're investing into. And so don't be embarrassed. And and whether a good agent or a bad agent, I think sometimes, life just kind of moves. Mm-hmm. And so you could have a really good agent that you guys just haven't been able to sit down yet.
That's true.
To talk to it. So I wouldn't even necessarily go all the way to blame. I think if you reach out and they keep ignoring you, then maybe you should find someone.
If the agent won't explain it to you, that's a problem.
Right.
But agents are not going to, it's not, the onus is not on the agent, or the responsibility is not on the agent to explain everything to you. Mm-hmm. I guess that is a good point. Like as a customer or as a consumer, if you don't understand something, it is your responsibility to raise your hand and say, hey, I have a question. I don't get this. Why, what do I even have? Right. Yeah. Like, I think that is a good question to ask. If you're not understanding it, if you're unsure, you're unclear, ask the question.
Right.
Yeah. You don't if you go to the doctor and they use big words, you shouldn't just nod and go along with it. Right. You should be like, what does that mean?
Yeah.
If your lawyer is using words you don't understand, you should say, wait a minute. Yeah. Define that for me, right?
Explain this for me, because I'm a little confused.
Right. These things matter. They make significant impacts in your life financially and long-term for your family. Mm-hmm. It's not necessarily that it's the wrong coverage. It just might be the wrong coverage for you.
Right. Yeah. And you don't want to find out, and we mentioned this earlier, and you don't want to find out after a claim.
Right, because it's too late.
Yeah.
It is too late at that point.
That's right. I think you said something about that, right? Or you've never said that to me.
Yeah.
It's like, I'm sorry. That's how that is. And it hurts as an agent, like at least for us, when we have to go, that was in the policy.
Yep.
Right.
I hate telling people that something's not covered.
Right.
When they want it to be covered, right?
Yeah. And I was explaining earlier with my house, realizing I hope this is covered. Like, as a consumer, you start realizing, man, I hope I understand what I have.
Right. I hope I did this right.
Yeah. I hope I know. And I hope the agent understood what I told them, what I wanted. Yep. And the last thing you want in a moment of crisis, one, to be that unsure, mm-hmm. but then to be told that, you're right, that's not covered.
Right.
That just brings frustration to everything.
Yeah. It's not, I will say this part, when I have to tell a customer it's not covered, I feel bad to tell somebody something's not covered. Mm-hmm. Although ultimately it's not my decision, it's the adjuster. Yeah. But I'll tell them hey, we'll open a claim, because I understand this is a significant issue for you. My experience is that this isn't covered. Mm-hmm. It doesn't make me feel as bad when I know that I've talked to the customer mm-hmm. and we've discussed things and they said they didn't want to do it. Mm-hmm. And then I'm like, well, you chose to save the money. Mm-hmm. on the insurance. Ultimately, my job as an insurance agent is to make recommendations and then follow your directions.
Yeah.
I don't write the policies for you. I will do what you ask me to do.
Right.
And so there is responsibility on the consumer. And I've had this discussion with, we have insurance called errors and omissions as an insurance agent, where if I make a mistake, right, like I meant to do something, I didn't do it right, so I made a mistake, and it results in a coverage gap or issue for my customer, that would go on my insurance, and it would be covered then. And so I've discussed at length with our errors and omissions company as well, like what are the things that are responsible and what are not. And this goes back to your point when you were just talking a minute ago about if you don't understand something, ask the question. Because the errors and omissions industry is very clear that as an agent, if I make a mistake, that goes to errors and omissions. If I misrepresent something in error, on accident, not on purpose, I'm not like lying to you, I just made a mistake, that's covered. If you as a customer did not ask a question and didn't buy an optional coverage that you need, that is on the customer's responsibility because they didn't make the agent aware. Now, if you told me about something and I'm like, yeah, that's covered, but it actually wasn't, that's on my errors and omissions. But if you never told me something, right, you didn't tell me, oh, I have this big fish tank. So I never told you, oh, by the way, your fish tank is not automatically covered on your homeowner's insurance.
Yeah.
Or there's an exclusion on this policy for fish tanks if it bursts, right? I didn't tell you that because you didn't tell me you had a fish tank. So how am I supposed to know? It's unreasonable to think that an insurance agent is going to ask you every question that could possibly come up in a claims scenario. It's not their error if they didn't ask you about a fish tank.
Right.
If you told them about the fish tank and they misrepresented the coverage, that is their error. So you do have to make sure you have honest discussions with your insurance agent about what you're doing, because I think this is kind of a nuanced part of it. But when you get into the details of insurance, it matters. Oftentimes customers are trying to figure out how to get the best rates, and so they try to leave things out sometimes because they've realized like, oh, becomes an issue. Some insurance companies don't like this, and so I don't want to tell them about it. It's like, well, that's fine, but you might have just wasted your money.
Right.
Because now you bought a policy that was cheap, but it's not going to help you because you didn't disclose these things.
Right. Yeah, that is like the transformation or the education of trying to get people to understand like details matter and coverages matter, because oftentimes as consumers, and we get stuck even as agents, sometimes we sell it this way or we just go, okay, it is what it is. That's where we're trying to get, the cheapest policy for the best service. And it's like, there's no such thing in the world like that. Like no business is set up that way.
Right.
I want to give you a Rolex at the price of a Walmart watch. Like it's not
the Rolex at the price of a Timex.
Yeah. There you go. Like that's not a thing. Right. And I think to a degree, educating people is just to kind of get us all in that same page of going, hey, you can't pay for the lowest premium and expect the best service. Like, so let's be aware, at least in that point. And going, details matter because
it's funny, right? Because people do I've seen lots of signs, like oftentimes at a mechanic shop or something, they'll like, you can get it quick, you can get it good, or you can get it cheap.
Yeah.
Pick two. Yeah. Right?
Yes.
Like you can't get all of it. You can't get quality, consistency, good service, comprehensive coverage, and the cheapest price in town.
Right.
Like it just, nobody's going to do that. You can't get a steak from Ruth Crisp at the price of a steak from Denny's.
Right.
Like it's just not going to happen.
Right.
But people think they do. They're like, well, Denny's. Like it's like they walk into the Ruth Crisp and they're like, well, over at Denny's, I can get a T-bone steak for $24.99.
Yeah. You guys price match?
Right. Can you price match that? And Ruth Crisp was like, well, then you should go to Denny's.
You should get up. Yeah.
Yeah, because it's not the same steak. They're both T-bones, both 16 ounce. It's like, well, your experience is going to be a little different. Let me just tell you that, right?
So last question then, like, what would you tell a client consumer? We just listed off a bunch of coverages. What would be your next step to say, okay, maybe I should go get educated? What would you?
Well, I think that would be, I think first off, as I think you need to, if you have your own policy, right? Like look at it, say, what is my coverage form? Is it basic, broad, special? Is it an HO3? Is it a DP3? So that's where I would start. And then I would ask my company for a copy of my policy. And I know that it's laborious to try to read through it all. So I'm not even going to suggest that you do read through all of it. What I would focus on, if you have a special form policy, which means it's an open perils with exclusions, then I would focus on the exclusions. Like read through the exclusions and like, okay, is there anything I'm concerned about here? If it's a named perils policy, then you don't have to worry about exclusions. You just have to worry about what's actually covered because it's only covering your named perils.
If it's covered.
You might want to look at exclusions too, because there still might be exclusions associated with those named perils. But for the most part, you're really just like, okay, this is what I'm covered for. It's going to be very basic. And then I would go, what am I comfortable with? And then I would communicate what I'm comfortable with for risk to my insurance agent and say, this is what I'm comfortable with for risk. Can you make sure that everything else is covered? And then the agent can go in and look and say, okay, here's the changes we need to make to your policy to add coverage for this. I'm going to make a change over here because you're okay with this deductible limits, and start to tweak and customize that homeowner's policy or car insurance policy or business insurance policy for you. So that's what I would do as I first start with, like, I need to actually know what I have. And if I don't understand it when I'm looking at it, if it looks like Greek, then I'm going to say, I need to schedule an appointment with my agent and say, sit down with me. I need a half an hour to an hour, and I need you to explain this to me because I don't understand my coverage.
Right. Yeah. And you're definitely taking people and educating people from going, you're not just buying insurance to meet a need.
Right.
You're buying insurance to protect yourself.
Right.
Because you don't want to have question marks when you're trying to fix your house.
Right.
And go, well, I didn't know the coverage, or I didn't disclose it to my agent, and now I have to figure out how to repair, whatever it is. And so it does take, like you said, it's a little bit labor intensive in a sense of like having to read or just even set up a meeting. Some people are too busy, but it's the question mark of, but is it worth postponing for $100,000 loss?
Right.
And it could have been a simple, oh, I do have a water tank. Okay, we should find,
I have a sump pump.
Yeah, have a sump pump. Like, it's an easy detail that is going to save you, tens of thousands of dollars at the end of the day. And so, yeah, it's a good encouragement to say you should probably take some time to invest into what you're investing into.
Yeah. So. All right. Well, hey, we're running out of time here for this segment. we're going to do our after show after this. And I want to kind of piggyback more on what you talked about, like Timex, Rolex. Yeah. You get what you pay for. I want to talk about Yugos. So we'll talk more about that in our next segment. So thanks for joining me, Gerald. Thanks, guys, for listening today or watching. If you have questions, feel free to send us an email at theagentinsider@gmail.com. Until next time, thanks so much and have a great day.